One of the important decisions home buyers have to make when they're purchasing a home is how much down payment you actually have to put down. And a majority of people put down 20% and some believe that that's their only option. That's not necessarily true. Depending on the scenario, you might be able to put down 5%, 10%, 20%, anything in between, or you can go above and beyond that, 30%, 50%, 100%. There is all cash buyers out there. So I'll explain anything under 20%, how that works, and pros and cons of each one. And hopefully by the end of this video, I'll help you make a decision on when you're buying your home. So the biggest question is why do a majority of home buyers put down 20%? Like, where did this 20% come from? Well, the reason people put down 20% is this is the lowest amount you can put down to avoid paying CMHC fees. And what is CMHC? It's an insurance for your mortgage. So anything under 20%, even like 19.99, you have to get mortgage insurance. It's the same concept as car insurance. If you get into an accident, the insurer will cover the cost of the repairs. Well, if you put down anything less than 20%, if you start defaulting on your mortgage, the insurance will start taking care of the payments. And CMHC stands for Canadian Mortgage and Housing Corporation, and they're the insurer for the mortgage. The one important thing to note is if you do decide to put down anything less than 20%, even 19.99, and you are now taking that mortgage insurance, your mortgage lender will actually give you a better interest rate on your mortgage because they know that even if you start defaulting on your payments, that the mortgage insurer will catch up the payments for you or make the payments for you. So it's less risk for them. So they'll actually offer you a lower interest rate. Now, will you actually start saving on your monthly payments if you get a lower interest rate? But you are paying the CMHC on top of that. So when you kind of do all the calculations, it doesn't really make much of a big difference in terms of your monthly overall payments because what you save on your interest rates from your monthly payments just kind of gets added by the CMHC. So like one kind of cancels out the other. At the beginning of the video, I discussed that there are options to put down anything less than 20%, like 5%, 10%, 19.99, and everything in between. However, these rates apply to certain types of situations. So for example, if you're looking to put down 5%, first of all, you have to qualify for this. This isn't just available to everybody. But however, this is only for homes up to $500,000. Anything over $500,000, you're required to put down a minimum of 10%. So $500,000 and less, if you qualify, you have the option to put down 5%. From $500,000 to just under 1 million, so $999,099.99, the minimum you can put down is 10%. And everything over $1 million, you must put down a minimum of 20%. So those are kind of the different requirements for the different down payments. However, like I said, this doesn't just apply to everybody. You have to be approved for this sort of stuff. And this is based on your income, your credit score, and all the other things the mortgage lender takes into account when they're making these decisions. So all this information is also important for home sellers. And what I mean by this is, let's play the scenario of your home is worth around the $1 million mark, like 110, 115. If you don't want to take any price under $1 million, you could be losing out on a lot of potential buyers. And what I mean by this is if there's a buyer out there and they only have 10% to put down, so on $1 million, it'd be $100,000. And you don't want to take their offer price of $999,999.99, then they might not be able to buy your home because they only have 10% to put down and they're approved for 10% to put down. However, if you're asking over $1 million, they have to put down 20%, but they don't have the 20%. So you have to kind of take that into consideration when you're on those borderlines. Same thing in the $500,000 range. Like if your house is worth 510, 515, and there's buyers that only have 5%, but in order to qualify for 5%, the home has to be sold for just under $500,000. It might be in your better interest to kind of sell them to that even $1 underneath, so at least they qualify for their mortgage. So this is how you can get more potential buyers to get your home sold faster. Now, what are the actual premiums of the CMHC insurance? Well, it's based on a percentage of the borrowing amount, and it ranges anywhere from just under 2% to just over 3%, depending on your down payment. And this isn't a lump sum that you pay up front. This is kind of calculated all into your mortgage. So your actual monthly mortgage payment doesn't change too much because it'll be on an average home sale around $750, it'll be $10,000 to $15,000, which is just added on top of your overall mortgage. So your monthly mortgage payments doesn't change too much. So you might be thinking to yourself, well, thanks, Ermin, for all that information. However, I still don't know which option should I take, 20% or anything less than 20%. Here's my advice. If your only option to purchasing a home is putting down less than 20%, 5%, 10%, 15%, whatever it is that you might qualify for, then take that option, because buying a home is always better than not buying a home. However, if you do have the 20%, I would suggest putting down the 20% because you'll pay off your mortgage faster and it won't make much of a difference on your monthly mortgage payment. So that's my advice. However, at the end of the day, you can decide to do what's best for you. And I always advise talking with your mortgage broker or accountant to kind of sit down, do the calculation and figure out which is the best option for you. Well, hopefully now you have a better understanding of your down payment options. And if you have any more questions, definitely leave a comment at the bottom of this video. And as always, remember to like and subscribe to my channel so you don't miss out on any other future videos.